Welcome back everyone and hello again to the Money Control live stream. You're watching Markets with Santo and CJ, and well, it's been a strong day. It's not been a great day but strong day. We have been resilient. The bulls have maintained the edge in the market. If you look at the Nifty and Sensex, they are both holding in the green territory, and in fact they have added to the gains over the past half an hour. If you look at the main leaders, they are banking and FMCG names who are doing well. Other sectors are also doing decently. IT also has seen some sort of recovery, but clearly it's the banks who are dominating the leaders at this point of time. And it's the small and mid cap space where you are seeing a lot of risk appetite recover. At this point of time, the Nifty small cap 100 and the Nifty mid cap 100 are both outperforming the Nifty 50. So clearly there is some risk back on the table. But I think the major reason probably behind all this is what is happening with foreign portfolio investors. For the first time since April, they have been net buying Indian stocks for 3 consecutive days. It can be 4 consecutive days if probably we see a net buying figure from the cohort later in the evening, but we will have to wait and see for that. And clearly, Santo, I mean, after $32 billion worth of selling, I mean, the number itself is so humongous, I can't even think about it. $32 billion of selling since October, and it seems like probably they are done with their selling, and maybe, just maybe they're looking at buying Indian stocks once more. The argument could be that valuations have become quite reasonable over the past 6 to 8 months. We are now, if you look at the 1 year forward earnings, is actually quoting below the long term average for the Nifty 50. So clearly the valuation argument is no longer there, and it will, of course, the sustainability going ahead will depend on how the US Federal Reserve rate hike situation evolves. If it becomes very aggressive, then you can expect this to be a very small party.
Well, on that point about FPIs suddenly turning buyers, two things here. One, we've just seen about 3 days of 3 straight consecutive sessions of buying. That's one. Two is that CJ, they've been selling so heavily that all the buyers have run away. Right now, there is nobody to sell to. Right. So what do you do then? So you buy some more, create a kind of some bit of depth in the market so that people come back, and then you can sell some more. That's how probably I would take a look at it.
Well, it's not like all the buyers have gone away. I mean, clearly, despite the $32 billion worth of selling, Santo, we have only fallen 15% from the top. Actually, even less than that. Probably right now the correction overall would be around 10 to 12%. So clearly, domestic investors have helped us, but of course, there is no way that they can match the the selling pressure that FPIs have been bringing to the table. And I just think that probably, I think valuation is one thing that is probably now working in favor of Indian stocks. Clearly, before all this Russia-Ukraine war, the only argument being peddled out there for the FPI selling was the fact that Indian stocks were just too expensive compared to other emerging markets. Well, but if you look at other emerging markets, you have situations like Turkey, you have situations like Sri Lanka, right? And at that point of time, then you look for reasonable valuation and stability, and India provides both of them.
Well, with that, we move into the stocks on our watch list this afternoon, starting with ITC. Stock continues to inch higher, and now for this year, it's almost given a 30% return, and that's quite some returns for a stock which was labeled as a meme stock till not long back. CJ, a good comeback there.
Yeah.
Now, Chairman Sanjeev Puri was on CNBC TV 18 today. He was asked, on whether ITC is planning to take its infotech arm public. So he was not very
keen on that.
It's not the question of keen on that, but he said that the hotels business, the demerger of the hotels business was a bigger priority, which is quite understandable also. At the same time, he mentioned that he was waiting for some more of a recovery in the hotel business so that he can get good valuations. But CJ, the main trigger for ITC from here on, the strong tobacco growth and everything is pretty much discounted by the market. If stock has to now further move from these levels, then probably you need something more than just the pure earnings story. That I think has been discounted. Probably as and when there are some moves on the restructuring front, such as the demerger of the hotels business, that is when maybe you will see the next very sustained up move in the stock.
Yeah, and Santo, just to make about that point where he's trying to wait and see whether the hotel business recovers even more so that he can get more value for it, and then they blame retail investors for trying to time the market. So yeah, I mean, that is one point I wanted to get out of the way. That said, let's come back to the entire demerger story. ITC and demergers go way back. I mean, it's been a story that has been running for many years and has gathered steam over the past 1.5, 2 years, since its own investors have actually backlashed against the company. Now, from what I know, ITC, while it is suggesting that the hotel business is priority, that does not mean that it's going to happen tomorrow, right? It will take its own sweet time, because ITC in its own self, if you watch that interview, they have also said it there. They do not really. They are not against the idea of a conglomerate status. They actually like that idea pretty much. It saves them a lot of taxes. According to them, it provides them the synergy in running all the three divisions in the way that probably being a demerged entity would not. So I don't think ITC will be rushing ahead with any sort of demerger plan there. Apart from that, as you mentioned, Santo, the best of the earnings optimism clearly seems to be in the price. And although the stock has hit the 300 mark, the much awaited 300 mark today after 3 years, I think that level will act as a very, very strict resistance for the stock. We will have to wait and watch whether it goes towards this record high of about 350 odd rupees that it hit in 2017. But for me, probably this is the level from where a lot of longer term investors who have not made no money, I mean, people who would have bought the stock back in 2018, 2019, will start looking at some, cutting the losses or booking the profits. Well, one stock where I'm a little excited about this, because this came out of the blue. Nobody was expecting this to come, and that is Barbeque Nation. Well, the stock surged quite significantly today on the back of reports that Ashish Kacholia, a veteran investor, we all know about him. He has actually made an entry into the stock and probably has bought more than 1% stake. Now, I mean, I am actually not surprised that he has done that, given that the QSR space is one space which has a very long growth runway. Recently, we had seen a lot of selling in this space, Santo. I mean, you had management issues with Jubilant and other concerns around margins, specifically because raw material prices were quite high. But now it seems that pressure should abate from this quarter onwards. We have seen prices of wheat and other soft commodities come down, so I don't think the margin pressure argument holds anymore. And apart from that, I mean, there was never any doubt that the QSR space is probably one of the the best spaces to be if you believe in the India consumption story or the India growth story. So if you're bullish on India, there is just no way that you can't be bullish on QSR.
Well, fair point there, but then the top line has been growing quite well over the last couple of years, but again, you're not really seeing that in the bottom line. It continues to make losses there. So that is, I guess, in this kind of a market, something that investors would be a little cautious. See, in itself, inflation may not be such a bad thing. There are industries, there are companies which may be able to hold out well even in an inflationary environment. But then you have to either show that you're capable of combating, like for instance an HUL did. There was there's a hit on margins, but overall by managing costs and everything, it still turned in some pretty decent numbers. You're not exactly seeing that with Barbeque Nation. So that's what makes me a little skeptical here. Now the stock has come off quite sharply. It was around 1900 levels not long back. From there it's down to what, 1200 odd. And if you look at the price trend over the last 3-4 months also, you will see that unlike other pure play consumers, largely you have not seen any kind of steady uptrend in this particular stock. Doesn't look like market is particularly excited. You're not seeing volumes at the counter either. I'd be a little careful on this one, CJ.
Well, Santo, I think the only argument here is whether you can have faith in a long-term argument here. I mean, because with Barbeque Nation, of course, expenses will probably generally be higher because you have to spend a lot on marketing, brand building, and of course, store expansion as well. So I think on that note, investment, given the fact that the company would remain in investment phase going ahead, I think you can expect profitability to be a little lower than what you would probably be used to in other sectors. But that does not take away the fact that ultimately the company is focusing on turning good profitability, cash profitability, and overall the long-term growth trajectory also remains quite good.
Well, Hindustan Aeronautics, the next stock on our watch list, it looks like the uptrend there has resumed, CJ. The stock was among the key gainers today, up about 1.5%.
Well, you were talking about it in the morning, defense sector, and clearly people have listened to you.
Well, in the case of Hindustan Aeronautics, again, pretty much the same themes, higher defense outlay for higher capex outlay for defense, plus the indigenization theme, and the fact that the stock has been undervalued for quite some time now. Now it's only recently over the last few months that investors are beginning to take note of the strong order book position here. 82,000 crores, that gives pretty much a lot of visibility in the near term. So all these factors considered, I think maybe the stock still has some steam left. There was some profit booking and consolidation over the last month or so, but now looks like the stock has resumed its uptrend.
Well, Santo, you can't deny, I mean, the gains that Hindustan Aeronautics has given this so far this year, but I think also it's been riding the the entire risk averse or the defensive bet that market has been playing at. I mean, along with sectors like power, FMCG, defense is another sector which probably generally would not be affected by business cycles, because especially at home, we're largely dependent on what the government is doing. So I think probably some part of the gain is attributable to that. Apart from that, the stock is already sitting near its 52-week high. I don't think it's too far, from that level. So I don't know how much of an upside is left. And lastly, I think the concern around HAL definitely remains around the execution part, because with supply chain issues happening, with difficulties in importing a lot of parts for some of the manufacturing processes, all the earnings growth outlook could get hit if these supply chain issues persist. So I would be a little cautious at this level. Maybe you can wait for some sort of a dip to come into the stock to re-enter, but at this level, just the risk reward doesn't seem very attractive. One stock where things are looking up after what was a very torturous first 3 months is Havells India. Well, clearly the resilient earnings for the June quarter have impressed investors, even though there has been a very, very sharp decline in margins. I mean, multi-quarter low margins for the business, around 8.5%. But overall top line growth was very resilient, and the demand scenario also seems to be quite good, despite the higher prices that we are seeing in many of the segments in which Havells is involved. That said, if you look at the margins, I think the major issues were in the cable business and the Lloyd's, the business that they acquired, the Lloyd's business. Now, there, I think the management commentary was very interesting, Santo, because they are suggesting that with the raw material prices recently abating over the past 1.5 to 2 months, they expect that margins in both the cable and the Lloyd's business should now come back to normalized level from Q1 onwards. Now, both these segments have taken hit, but the normalized level for, say, Lloyd's is about double-digit margins, whereas the cable business has about 14 to 15%. So clearly, there is a lot of upside on margins, and probably investors might look to play that. And on the demand scenario, the management suggested that the scenario remains quite healthy, but they expect more improvement as we head into the festive season, hopefully on the back of a very good rural demand situation.
Well, CJ, yes, that's the point even I was trying to make, that the management itself is slightly cautious on the margins front, and it is said that it expects normalization soon, but how soon then again becomes the big question here. I would think that purely again going by the stock price here, the valuation seems to be a bit of a concern, and that's what even analysts at Money Control.
But Havells has always been rich.
It's always been rich
because of the growth it provides.
But it can stay rich for a while, which means that it could consolidate for some time before investors feel that there's likely to be a big earnings jump, and that's when they start buying again. So at this point, clearly it's valuations which is holding back the company, which is what analysts at Money Control Pro have also pointed out, that one can wait for a better entry point in the
possibly
stock.
I mean, you could probably see some profit booking along the journey, but I think the overall long-term trend for Havells just seems to be on the upswing, because this is again another consumer story, another construction sector story as well, given that real estate side of the economy is doing quite well. So we will have to wait and see whether being cautious works out or being bullish at this point of time works out for investors.
Well, maybe then it's a caution on the real estate side of the story that was leading to the stock being stuck in a bit of a range this year so far. Well, Sun TV, the last stock on our watch list. After hitting a low of about 412, you're seeing some signs of life in the stock, and you're seeing some pretty good volumes also. But see, I'm not sure how much this recent uptrend can sustain, given that some of the basic concerns, the reason why the stock had fallen so much is also, one of the reasons is that in the OTT space, the company has not really been able to get its act together. And given that we are still awaiting clarification on the new tariff order, it means that Sun TV cannot increase the subscription price of its channels. Besides that, there are some corporate governance issues which have always been there for a while now, which is leading to most institutional investors not really taking a liking for the stock, despite valuations being very attractive. So I think probably the recent up move could also fizzle out shortly.
I think Sun TV could be a good tactical bet. Yes, I would not go ahead and suggest that it could be a good longer term bet, because of course the entire fracas around the promoter's salary and why they are taking it remains hanging over the head of the company. But from a tactical point of view, if that tariff order does come in and we get that approval, then you could clearly see a big bounce on the stock on that basis. And apart from that, I think as far as the OTT business is concerned, I think Sun TV is focusing more on movie production at this point of time, given the the new demand that we are seeing not only in South Indian market but as well as in the North Indian market for South-based movies. I think Sun TV has realized that it's better to capture this for the near term than to focus on the OTT business at this point of time. So I think probably on the content side is where the management focus remains to be, and we will have to wait and see whether that also translates into the OTT side. But yeah, tactical bet at the best, not really a long-term pick at this point of time.
Well, let us see. The first quarter numbers should give some indicators of that, and a quick quick check on the market. The breadth is pretty strong even now.
Yes,
1,600 stocks on the NSE higher, about 1,100 stocks are down.
And it will be, Santo. I mean, look at the Nifty Mid-Cap 100 index is higher by about 1.4% today. Small cap following suit, higher by about 0.8%. Nifty Small Cap 100 is higher by about 0.8%. And the Nifty is higher by about 0.5%. So clearly, of the three major indices, it's the mid-cap space that is doing quite well today.
And also, the indices have managed to retain the gains made in the afternoon. There was some bit of a wobble around noon, but the market has managed to overcome
I mean, if you look at the top gainers today, Hindustan Bank clearly, I mean, it's the rank outperformer today, higher by about 8%, followed by Bajaj Finance, 3.5%, Tata Consumer around 3%, and UPL around 3%. So clearly a good mix of top gainers there. It seems like, Santo, I think the market somewhere at this point of time has made a bottom around that 15,200 level, and we have to wait and see whether we edge higher towards the 17,000 level and then see another round of profit booking, or whether we have made a medium-term bottom at 15,200 in this cycle of bear market.
Well, earnings continue to be the key driver for this market, and what are we keeping an eye out for?
Well, Santo, before the earnings today, later in the evening, we will have the ECB or the European Central Bank coming out with its monetary policy outcome, so that will be very crucial. There is talk of about 25 to 50 basis points of rate hike. Now, let's not forget that ECB would have got a shot in its arm after the Nord Stream pipeline was restarted by Russia following the maintenance closure. There was fear that the pipeline will never be restarted, and that would have worsened the economic outlook for European Union. So clearly some good news there for ECB. Apart from that, on the earnings front, clearly Ultratech, HDFC, AMC and Crompton's earnings will be washed out, because these are the numbers that will be coming out during market hours tomorrow. And later today, later in the evening tomorrow, we will have the big guys such as RIL and JSW Steel reporting their Q1 earnings.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 9 a.m. tomorrow morning.